we're now going to go on. Let us actually have the members of the round table to join us here. Michaela Koller is going to be chairing this first debate. Thank you, Michaela. And I just wanted, now before that, I just wanted to say a few words and make an announcement. Here, join us here on the stage, please. And make an announcement here. Perhaps someone was supposed to be here to make that announcement. The finance minister in Luxembourg, Monsieur Pierre, but he had to, as you speak through a video. He's got very good reasons. He's got a very good excuse for not being with us. He actually won the elections. And let me just add that he was quite surprised by the results. In other words, I'm not going to give you a lecture on Luxembourg politics, but today, right now, he is talking about the budget and the entire economic agenda in Luxembourg. So he was ready to actually come over, but this would have actually infringed upon his or cut off his initiatives. So he's fascinated by the economic financing and the role of insurance companies, and I believe that he is going to make a brief statement, and this is going to be a triggering process here. And Michaela is now going to chair the debate. Dear friends, dear FFA friends, I would have been very happy to be with you live rather than use this camera to speak to you. But understand that in the aftermath of the elections, and my party has won the elections, I'm now in Luxembourg and need to work with my team, the team and the administration, so as to set up a new government in the next few years. We will be very happy to meet again. Mr. Chairman of the FFA, dear Bernard Schmidt, dear colleagues, dear Giovanni Richier, dear François de Roy de Gallo, dear Minister Amaguba, now with you today. You're now talking of topics which I take very seriously, inherent to the risks we are undergoing in the insurance world and the role which the insurance sector might play in this context. I identified 3 of those risks, which I would like to share with you, and you will probably have ample opportunity to get into the nitty-gritty. The first risk I see emerging is the multilateral process being put back on trial. We witnessed that in Europe with Brexit, which is now being conducted right before us, and we realize that by unraveling the EU process, it is very difficult and very challenging and is raising issues. Our British friends realize that they're going to lose access to the single market. They perhaps, had they raised the issue beforehand, they would have voted differently, but I mean, this issue does not, or is not just relevant in Europe. In other parts of the world, agreements have been signed, and those are put back on trial. And this is the very basis of international law. Those fundamentals are jeopardized, and this is a very dangerous evolution. How will the insurance sector be poised for battle accordingly? This is a very difficult question. The second risk emerging here is inherent to cybersecurity. Now, this is a fallout of the economic digitalization process. Now, this digitalization process is enhancing productivity and is also incentivized by consumers because it provides them with products and services that are less pricey than in the past. But this also forces major data centers and I mean, as a result, all the information on the internet are easily accessible. How can we protect the data, and how can we prevent malicious parties to misuse or abuse or misuse the data? This is an issue which the insurance sector should raise. How can we cover those risks provided or generated by the digital world? The very last point, now the third point, everything that revolves around the climate and the Paris Convention, the Paris Agreement. Thanks to that 2015 Paris Agreement, we all realized that colossal investments were necessary in that field. And if we want to curb temperature increases by less than 2 degrees, as scheduled. Now, besides all the efforts conducted by the governments and the states, the private sector will also have to be fully involved, and public efforts would just be trivial without them. So we need to use the private sector to generate further colossal investments. However, we know that the insurance sector and pension funds represent part of the answer to this, because we could, thanks to major insurance companies, we could actually generate a lot more investments in this field. And we've been observing that the rules are just too penalizing, and as a result, insurance companies are not really that encouraged in investing in infrastructures. I'd like to call on all the states, all the member states, the Solvency II rules in the investment sector. The Solvency II rules should be simplified and less stringent in the insurance sector, so as to really be able to raise considerable financial instruments so as to support climate or curb climate change and investments. Well, I think Juan is amongst you, so I think of our Italian friends. If we want the Italian economy to undergo a turnaround and reach the EU average, then the Italian economy in the private as well as in the public sector should be or participate in an ambitious investment program. So have a very nice debate. And although I'm not here with you, but I'll be thinking of you. Have a very nice day.
Well, good morning, everybody. First panel, a changing landscape. I'm joined on the panel by eminent speakers. I will briefly introduce them. You have the details of all the speakers in your conference booklets or on your iPhone or phones generally. I start on my right-hand side, your left-hand side, Jacques de Peretti, PDG of AXA, joined by Jacques Richier, PDG of Allianz, Gabriel Bernardino, President of EIOPA, Mohamed Hassan Bensalah, the President of the Moroccan Insurance and Reinsurance Federation. Our international guest, also Juan Pazo, the Superintendent of Insurance of Argentina, and Pascal Demurger, Director General of MAIF. Very happy to have you all in the first panel, and we will discuss a changing landscape. But before we start our discussion, a couple of housekeeping points. You all have received a piece of paper with a QR code on it. Could you please scan it? Because that will help you to participate today in the events. There will be interaction between the audience and the panel. And while I let you scan the URL or the code, I can announce that we start directly with an audience question to kick off the debate. And I hope that will both show up at the screen, and it should also show up on your phones. So if you check that, and can we have the question on the screen, please? So the question is, what do you think are the principal risks that we are faced with? You have the choice of 7 risks, and you can vote now.
There is one for you.
And then I hope we get the results. The idea is obviously that I will ask you what you think about the results, but you can make up your mind also on the panel to maybe share how you, what you think from your perspective are the biggest risks. Okay. Well, maybe I start directly. Jacques, from your perspective, I start.
Écoutez, tous ces risques me paraissent.
All these risks seem quite important to me. There's one which both on the short and long term appears to have an obvious impact. This is climate change with obvious impacts on the storms and flooding and rainfall. And I guess that 2018, following 2017, was a very, very bad year for the insurers. And when you look at the 20 years trend with surveys and reports in our company and elsewhere, we note that this risk has been increasing regularly and constantly, and I think this risk will take over the risk of fire. Jacques, I think I can't say more.
That the climate change risk, it's going to be very significant, and either we take it politically or not, that's a different thing. But I think that the scientific evidence that is already there shows that that's going to be definitely something that we need to be very attentive. And I would always like to look at these things from the other perspective also, because I think it's also an opportunity, and especially for the sector. Climate change, but also cyber, can be tremendous opportunities in terms of making sure that we use the role of insurance to help us all in terms of the society and in the protection overall. So big challenges, but I think also huge opportunities.
Mohamed?
Je vais reprendre un peu ce qui a été dit, mais
I will take up what was said. I would only add that with respect to climate change, this is the most irreversible consequence over the long term. And even if measures are taken, they will be very difficult to implement quickly. So these are long-term risks. And even if decisions are taken over the long term, it will be difficult to effect results as the cycle is a long-winded cycle.
Argentinian perspective, climate change is a huge risk. We have passed the biggest drought in the last 70 years in our country, and almost 45% of our GDP is related to our agricultural business. So for us, that's a huge challenge.
Pascal, any other views on the other risks, or?
No,
I think everything was said. There are risks which we are confronted with as insurers and that we have to provide coverage for, and I fully agree with what was said. Over the long term, the climate risk is obviously the most important one, and then there are other risks that we are confronted with as organizations, and there are risks of market discontinuities which may prove extremely difficult to face up to over the very short term, which are not showed here, as it was not the point here.
I try to go a bit more in your direction than later on when I give you the floor for more detailed feedback. But let's now go directly into the discussion, and I start with Gabriel.
Yeah.
Gabriel, you are now the president of EIOPA for 7.5 years, and beforehand already you have been leading CEOPS.
Yeah.
So I guess it's fair to say for the last 10 years you have been fairly influential in European rulemaking and rule setting and advice on rules. Now, when we look at where we are today, are you happy with the outcome? Do you think we are at the perfect spot? Are we at the right place with our level of regulation? So what's your view?
Yeah. Well, I think that the progress is impressive, to be very honest. If I remember when I started my career and what we had from a regulatory perspective, both in the different member states, but also at European level. I think we made tremendous progress, and of course, not only the regulatory framework, but all the discussion around it, and the way that we try to reflect better in the regulatory framework, also the evolutions in the industry, the bigger focus on having much stronger risk management, much stronger governance, to get to the evolutions in the society, also in the request for more transparency, to have a much better appreciation of the risks, and to have business decisions that are taken according to that, both in terms of capital, products, etc. So really, I believe that we have now a system which the foundations are much more solid. And what I think we should do, going forward, because we will never be in a perfect slot. Huh? And I think one thing that we need also to recognize is that nowadays the cycles are much shorter than in the past. Things change much quicker than in the past, and so we need to have, of course, appropriate processes to deal with, the evolution of the regulation. And that's what I would say that we need right now, not a revolution. What we need is an evolution to look at areas where I think we can do better, and that will be my aim for the coming years.
But can I push you back a little bit?
Course.
Now, evolution, yeah, I hear you, and that is nice. But when we look at what we have gone through as an industry in the last couple of years, we are going in endless cycles. You have just finished to implement one specific text, and then you are already starting to work on the review. And what we are seeing increasingly is also texts that are not sufficiently clear, that are sometimes contradictory, that pose a lot of problems in implementation. And there is really a concern also in the industry that more and more we are going through this endless cycle, producing more, but we are not necessarily seeing, better quality at the end of the day.
Wow.
The latest example, maybe just to give you something concrete, we are developing on sustainability, we are developing a taxonomy.
Yes.
This taxonomy will be available in 4 years. Roughly, I guess that is the educated guess. But right now, the industry will be asked to develop on an own personal company basis the factors for sustainability, so environmental, social, and governance factors. And you know already as a company that 4 years down the road you will get the official definition. Wouldn't it be better to wait, do the work first, and then ask companies to do the implementation?
Yeah, I totally understand, of course, the operational aspects. Believe me, of course, everybody that runs organizations knows about that. But I think this links quite concretely to what I was saying, that the cycles nowadays are, of course, much shorter. And I actually, I agree very much with the spirit of the speech yesterday from the Minister of Finance, Bruno Le Maire, that there's a lot of things that we have discussed endlessly. We need to take action. And in these issues, for example, related to sustainability, I totally understand that the optimum would be to have already a taxonomy there, and of course to apply it in a structured way, etc. But do we really? Can we really stand to wait another 4 years to do something proactively in this area? I don't think so. I don't think so. And actually, I think that this is an area where the insurance sector is on the forefront. We see already a number of insurance groups taking concrete actions, not only in terms of their investment activities, but also in terms of their underwriting activities. And if there's an area where insurance can be really quite important in helping the society and all of us to move in the right direction, this is one of them. Because insurance, can really incentivize the good behavior and can help us all collectively as a society to move from, of course, a much more carbon-based economy to a much more greener-based economy. Not because it's fashionable, but because we need it as a society and as consumers. So we will always have this tension between, the necessity to act quicker because things are moving much faster, And of course, the European national political process that takes much more time. That's true. Believe me. For example, and you know it, we have been discussing this. We are now in phase of starting implementation of the IDD. We would have preferred right now, of course, to have the IDD much more focused on digital information to be provided to clients, etc., which is not, because it was drafted many years ago. So that's a tension that we will need, of course, to manage. And I think the right solution at the end, and I know it's difficult, I think the right solution needs to be to have an ambience where we can have more principle-based regulation and more flexibility in terms of implementation and building trust between the actors and also supervisors to have a higher level of judgment to be possible to be made in day-to-day supervision. I know it's tough, but I think it's the only way to deal with the world in which we live.
Yeah, but if you are pleading for trust, one way of showing trust to the industry would be to allow for the ESG factors, for example, to be implemented on a voluntary basis until we have a clear definition, and that would help avoiding any liability risks that the industry is otherwise facing.
Well, we are on that precisely. We are still at the beginning of our reflection. You know that the Commission, of course, set these action plans, sent to us a call for an advice in this area. We are at the beginning. Our mindset is definitely that we should look at the overall spectrum of the framework in Solvency II and IDD, not focusing on specifically one area, be it capital, whatever, to look at the whole spectrum and to try really to include this, I think, in a positive manner, because I think that a number of things can be done in terms of good risk management practices. And of course, I understand that there will be always these issues about what's the liability, etc. As you can imagine, as regulators, we are concerned also with things like greenwashing, because of course, if you don't have concrete benchmarks, you can run into situations where you're selling something that is sold as green and it's not very green at the end of the day. But we believe, and I believe that we can find a way that we can start to do work. We go in the right direction. The sector helps to make this transition, and that the sector helps to do this transition in a way which is gradual. Because the worst thing that I think we could have is that if we all collectively, as an industry, rush, be it in terms of investment or in terms of underwriting, rush to one simple, unique solution, I'm not such an adept of a kind of a 0-1 world. I think that what we need to do is to make sure that we help the economy to move and to make this gradual transition. And by the way, that will be the way also to make sure that from a stability perspective, we don't create financial stability risks. So I'm sure there will be a lot of dialogue with the industry, and I believe that this is an area where we can do this in a virtuous way. Yeah?
Okay. Well, I move on to you, Pascal. Do you agree with Gabriel's assessment? We are in a much better place. And where do you see the challenges? Gabriel raised digital in the context of IDD. We all were not very happy that we still have paper as default. It puts us as an industry a bit at the back foot. But where do you see the challenges?
J'ai le sentiment qu'il y a une forme de...
My feeling is that there's some kind of a paradox here. I fully agree with what Gabriel just said. At the same time, we have the feeling that this regulation, which is being gradually dovetailed and fine-tuned, of course, is a burden on our companies with respect to heavy-duty processes and procedures to be implemented, and being a burden as quantitative requirements has been extremely refined and extremely complex as well, all the way to our organizational structures on which we don't have full control anymore, which is something which is quite new. So we can see that these regulations are being introduced and piling up, which offer some degree of protection for consumers as well as for businesses. But paradoxically, these regulations provide protection for past risks. There's some kind of adaptative regulation, which is quite normal, but regulation is being introduced as a function of situations which we have experienced and which we have encountered in the past. As a business leader, the risks which wake me up at night are risks of discontinuities in the market, and disruptions in the market. We know very well that for many years there were a number of barriers to entry in the insurance sector, which protected us. We know that in the future we'll be confronted with types and forms of competition which will be totally novel and with a much fiercer, much more brutal competition than what we had experienced with digital disruptions and big data management. We know very well that the entry barriers and the statistical character of our industries, meaning that basically in order to properly price a risk, you have had to be in business for a long time and have long-standing practice. This will no longer be the case, as we'll be confronted with players with extremely deep pockets, where we are confronted with a digital economy, which will have very minute economies of scale. In the past, economies of scale would grow and then would decline from a certain size. In the digital world, you have infinite models of scale, which will generate natural monopolies, which will corner the market in a context when and where we'll need to get accustomed to new practices by consumers and new consumption standards, which are changing radically. Of course, what comes to mind spontaneously is the new user experience standards, which will have to accommodate where digital businesses have been setting standards and new consumption habits which we have to adapt to and accommodate. Fine, it's our job, but there are things which we'll find it much more difficult to adapt to, and we are seeing this in our companies. For example, the totally addictive character of free services, free of charge services. In the digital world, more and more things are free of charge, and I'm speaking under the control of my fellow speakers here. More and more, to the benefit of policyholders, services are being provided which are free of charge services for most of them, except that they are not totally free of charge for us. So we can see that we'll be operating in a world which will be much more complicated competition-wise going forward, and we can mention risks of an intermediation and so on and so forth. And of course, regulations will not fully cover those risks, or only marginally cover those risks. My feeling is that there's some form of a gap, of a lag between what is being imposed on us, legitimately so. I'm not disputing this, but the way regulations impose themselves on us in the way we run our businesses versus the reality of some risks which are have more and more traction, and which regulations do not protect us well enough, only marginally so, because these regulations end up imposing on us so complex things that they constitute barriers to entry in turn, and can deter a number of new competitors.
That the GAFTAs of this world, they give things for free, but in the end, what you pay for is your data. You pay with your data, and data becomes the new currency. But they are active in our area, so to speak, without the corset of regulation. Well, you shake your head. You want to elaborate to what extent they are subject to it?
I totally agree that that's of course a fundamental point, and we are definitely in that discussion. We're just currently doing a thematic review on the usage of big data, and of course we're trying to cover all all the types of mechanisms in there. I was just shaking the head because, you know, the framework in which we live right now, it's a regulatory framework that applies, you know, to everybody that does, you know, insurance business. So irrespective, of course, of where do you come from. What I believe it will become, it's more and more difficult to capture those realities, because, you know, if you apply for a license, of course you are regulated and you have the same supervision. If you don't apply and you're in the kind of in the middle, that could escape. So I think what we need really is to make sure on the one side that the regulation is attentive to these new ways of doing business, and I believe that the way should not to block it, to be very honest. I think that we need to embrace also in the way that of digital, and to provide you know, better products, better services to customers, but to have a level playing field, definitely, and that should be the way to go.
But speaking about level playing field, even if they apply, which is already the question, are we sure that they are treated the same way everywhere in Europe?
Well, that's what we are looking right now.
Okay.
We'll come with some answers in a couple of time.
I pass on now to Juan. I think you are a regulator in Argentina, and you are currently holding the G20 presidency. You have been very active. You have set up an own insurance forum. For the very first time, established insurance forum in the G20. Where do you see the challenges? And I had the feeling when we had discussions at the beginning of your presidency, you felt like insurance was a bit the underdog at the G20, and you wanted to give it a higher status for all the right reasons. Can you share with us to what extent that has worked, and do you think insurance is now at a better place at the G20 level?
Well, what I could tell you is that it's a better place for our presidency. President Macri, our own president, has raised this issue in the G20 meeting. We raised the point in the finance track in Bali last 2 weeks ago, I believe. I believe that the meeting was a success, but mainly because when we started working on the process of our presidency, we identified that insurance was there in a minor position. I met yesterday with people with people of the Bank of England that told me that they were working in the Financial Stability Board regarding insurance, but I believe that this is the first time that the leaders would take notice about this. But this is the position of the Argentinian presidency. I was really glad yesterday when I heard Minister Demurger that they also take this point and knew the importance of insurance and in the matters that the G20 discuss. Our G20 priorities were 3, mainly long-term investment in infrastructure, food security, and the new
ways of working.
New ways of working,
yeah.
And we believe that it was impossible to discuss those 3 topics at all without the participation of the insurance industry. That's why we started with this process.
And happy with the outcome, so you have put it more on the center now, and in terms of challenges, when you are discussing with the G20 leaders, are these competitive issues coming out that Pascal has just mentioned, you know, with new players coming into the market, maybe not playing entirely by the same rules?
I believe that the first thing that we make was the awareness of the leaders. Okay, and that's a main difference, because when we started, at least, not even the finance ministers of the members of the G20 were discussing about insurance almost at all. So that was a main difference. I believe that we issued a common communique that was raised to the finance track. So that was a huge difference between other G20 meetings, because I believe that it was in Morocco, the previous one, that you have a side meeting, but it was only on the industry, not with the regulators. The other, I believe, the goal that was amazing was that we made it together with the industry. So we could work together with the industry, we could have common experiences, but also common conclusions. And I believe that we were more focused than in the new ways of that the insurance industry would play in other matters, and it was much more driven in long-term investment in infrastructure and how the insurance industry is a key player in that position.
Interesting, and let's hope that the Japanese G20 presidency will then continue on the same basis. I move maybe on to Mohamed. You are in Morocco, and we know that certainly your supervisor is very closely working both with EIOPA but also with the IIS. What is your sense of the challenges currently, both on the regulatory side, but more interestingly also on the insurance side, on the industry side? Where do you see the main challenges?
Merci, Michaela. Alors,
Thank you, Michaela. The Moroccan context is slightly different. We are in a market which is growing. It's not a mature market. We are at growth levels right now, which are interesting for sure. Our regulator is extremely dynamic in every sense of the word. I mean, in a positive sense, I mean. It was a way of saying hello to the regulator who is attending this meeting. At any rate, he's in contact with the various regulators, whether at the EIOPA or the Arab ones, the African ones, because Morocco it has that kind of diversity, continent-wise. You know, Moroccan companies, or companies in Morocco are quite sizable on the continent, but they are at very small scales versus the European context, just for the purpose of comparison. Now, in order to apply Solvency II in the letter and spirit, it's not something easy to do because the comparables are quite different. So that we call that SBR solvency based on risk, which is the definition that is in line with the spirit. However, we need to pay attention to the things that we will be implementing. For instance, and we've talked about that before, Solvency II leads to a kind of organization, a very heavy, cumbersome organization in terms of HR, human resources, IT systems. We even lose the upper hand on the management we ought to drive. So that's the first point. And also in regard to Moroccan special features, well, Morocco is an emerging country, confirmed, etc. Still, we are related to sector-based policies, which are quite substantial. In other words, in relation with the government, quite often we are asked as an institutional investor to move in a specific sector in order to provide support, growth, and it requires significant investments. It could be logistics, privatizations, etc. But on the other hand, what we have is that we have an issue with equity, so that the active class and the shares are very important. So when you apply solvency rule, then we say we shouldn't go beyond a certain amount. It's very difficult on the one hand to follow a specific policy, and was mentioned today, which is to support investment. On the other hand, say, hey, be careful, don't be within a specific category or at a certain level, so that, for example, in the case of Morocco, it might shock everyone here, but we're still at a level of class of assets allocation still at 60%. So you can imagine the differential, like we say, hey, now you need to go down by way of indication to 10 or 12 or 15. It's impossible. It's just way impossible. This could take place only over time, that kind of awareness. I mean, over time, in relation to existing assets, in relation to the new cash that will be required. So immediately it's a much longer time scale in order to adjust. This is the overall context. Having said that, we are still very active very much aware of things. And in Morocco, besides, there's Solvency I, which is implemented, especially with internal control and solvency reports. And according to the current formula in Morocco, we are still at ratios of solvency of every company which are between 2, 3, or 5 times the required ratio. And if we were to switch overnight from a position of solidity in the market, which is very good, and needing major equity, significant overnight, it's the same business. It's a bit difficult to explain to people that overnight you are beautiful, very wealthy, and tomorrow, dear shareholders, you need to double or treble your equity. It's a bit difficult to understand. Well, our regulator is very much aware of this, I must admit. It's not, I mean, it's not a sub-paragraph or under message. So thank you very much. It was very interesting. And sometimes we had the feeling that perhaps we have to change things too much. Pascal, we had the feeling of agreeing in many things that have just been said by our Moroccan fellow speaker.
You have a massive French operation, but you are also active, obviously, as an international player. Now, you have followed the discussion, Gabriel's description of we are in a good spot. Do you share the sentiment? Well, I tried to summarize, Gabriel, but are we in a good spot? Where do you see the challenges from your perspective, the perspective of an international group?
En fait, Michaela,
by listening to Gabriel and the previous presentations and Pascal, the uniqueness of our moment today is not that things are changing. We've already had things changing. It's more that there is a intersection of two different forces, which I will be summarizing here. Everything revolving around the regulation in a broad sense, your IFRS 17 data. I mean, the whole set of things and its density, because I've mentioned several things. We see every day or every year there's one more coming, so it's very dense. And on the other hand, there's a set of forces related to the transformation of the world around technology outlined by Pascal, and not very much interface between the two. We have a hard time dealing with both of them. In our business, the risk is that focusing on the fact of taking into account constantly on the regulations, either to secure the balance sheet or the relationship with our policyholders of consumers in general. If we are too focused on this, that we forget that in the meantime the world is changing. Why forget? Because quite rightly the regulator can regulate only what is in place or occurring and not what is to come. Right now, at least, we are not forecasting, and it's better like this for the time being. Ms. Bensalah did specify that it was better to not be in that kind of situation of the future. So we have these two sets. I was listening this morning. Someone was saying it's a figure that seems silly in a way, because we got used to it. 73% of French people at the end of 2017 had a smartphone. They were less than 20% 5 years ago. And by listening to this, hey, the smartphone is every action kind of connecting point for exchanges with anybody. It's about transactions. It has become a must in a way. And underlying the smartphone, since it was mentioned, there's a question of data, because it will be integrated. AI will also be included there. And we, with all of this as an insurer, we have to see that one way or another, this is have an impact on our business model, because it allows, first of all, it changes the behavior of our consumers, which are more in the immediate things in the customization process. In other words, it involves deep concepts in the insurance business, personalization versus mutualization. And this afternoon we'll be talking about risks, and we see that we need to remain in the mutualization whilst taking into account the customization. Just I and not just me, I don't want to pay for my neighbor. In a way, it's in opposition to our business. On the one hand, we have this new behaviors and new uses also, because in France, especially, we have things around the collaborative aspect, which is growing tremendously. So the technology, whether you want it, is bringing a shift in our business model. At the same time, there's a regulation. By definition, regulation means authorizing or prohibiting, because you put more or less capital, and the regulation that exists today requires that we be more refined with more complex models, whilst technology, on the other hand, wants us to simplify our relationship with our policyholders. We are at that moment, which is quite an interesting moment to go through, quite dense, and in both cases, I would say, it brings about a major shift in the business model. No one can imagine that the regulation does not bring a major shift of the business model. It sends you in a specific direction. I agree, especially with what Mr. Bensalah said just before. It's true. And in France also there are some paradoxes. Maybe it's the different sectors, but once in a while there's a minister who tells us you should invest more here or there because it's trendy and hip. However, today we have equity constraints that are such that we have to manage them. We are at this particular moment.
And the underlying issue here, especially when after having listened to the speeches yesterday, we still believe that this industry is here to take part in social development, the development of our European society, its ability to invest, to create jobs, and really to be poised for battle for the future. And how shall we do this? And this is a dialogue we should incessantly have and develop with regulators. In other words, we were able to secure it post-2016 because actually we're just the fruit or the result of a major event-related regulation, and we're now transferring out to another dynamic. In other words, the world has changed. Europeans need to live in this new world, and Europe needs to find its place. How can the insurance sector can support them? How can we actually transfer from security to guidance?
On the one hand side, the need to be more nimble, fast, lean, and then the regulatory reality that we are faced with. And I have seen that Gabriel is fighting to take the floor for a reaction.
I would agree the number of things, and especially on this issue of digitalization. And I really believe that we need to enter into a new paradigm. And I'm actually very happy and ready to enter into that discussion. I think that we can collectively do much better by using digitalization, as you said, that allows you, a much better way to engage with the consumers. And I think we can do a lot from a regulatory perspective, for example, in terms of all the disclosure requirements that are out there. I think we can have much more, I would say, focus on what consumers really use for their decisions, and I'm ready to to go for it in the coming years. But also, I think then we need the industry to use the the digitalization and these new business models also to go for simpler products, simpler propositions to the clients, and because that's also the key, to have a different type of regulation from a consumer perspective. We need to reduce the potential for conflicts of interest, for the non-understanding of the clauses that are in the contracts. And actually, I think that will benefit the consumers, but also the companies, because if you have simpler products based on more digital interface and simple propositions, it will be easier to manage and the costs will go down. So I think we can have in here, I would say, a virtuous way of dealing with this, and I'm ready to definitely embark in that journey in the coming years.
Well, I hear you. And I remind you that on PRIPS, IDD, we have been talking and trying to convince also your teams to do much, much less. We don't believe that 178 information requirements at a unit-linked life insurance product helps us to do simple products.
Yeah, but that
need
was
you
the
guys.
past, Michaela.
Yeah, but we are now heading in the same direction with the PEP. And again, we were told it will be lean. We will have no advice. I hear you, and we want to see it. That would be great. I move on to Jacques. Now, next year, we have a new commission coming in. If you were the commission president, what would you do? What would you change?
Thank you very much, Michaela. First, I have the chance not to be the next president of commission. I will switch in France.
Oui.
I
believe, first of all, I'd like to make a comment on what has just been said on what we're now experiencing at the head of a company today. I was lucky to leave the European market for 2 years. I went to Japan, and when I came back, I had prepared myself for quite some time now, and the plane, I had prepared myself to really believe that what had actually changed and what had to be changed rapidly was the way which we served clients. In other words, what Pascal and Jacques said. In other words, digitalization expectations, market breakthroughs and GAFAs and so on and so forth. And what I actually ran into was another tsunami, jokes aside, the regulatory tsunami. In 2 years, it had taken on a considerable magnitude in France with, in terms of scope, actually. Everything was actually impacted, whether retail and the way we manufactured products or made products, the way bookings were made, governance, and so on and so forth. No sector was not impacted. Intensity was also there, quite significant. In other words, our profession is different from in the past. The way we work is different from the past. And in this context, unfortunately, we focused on the fundamentals because we were talking about compliance. I mean, this was the issue, and what Pascal and Jacques are saying is quite relevant. Did we really pave the ground for the future adequately? Are we in line with what our clients are expecting from us? Are we going to be strong enough to face up to this wave which everybody is anticipating? I'm not sure, the GAFA wave and so on and so forth. And that's where I can say that regulations help us in being ready for 2008 types of shocks, but are not preparing us for what is now happening. So the question was actually different. You asked me, now, if I were at the head of the commission in terms of, I mean, insofar as the insurance sector, what would I consider? I got 3 items here which we need to settle on the European level. One is very clear. The one related to Solvency II, I believe that this was mentioned by Bernard, the minister. We need to enlighten the capital and share mechanism and perhaps focus on long-term investments and risk margins and so on and so forth. This has to change, and this has to be streamlined if we want to head in the right direction and to work better. The second item now is referring to Gabriel. I'm actually a player on the French and European market. Actually, we got a very nice regulations, but we also got announced disasters and collapses in the construction industry, for example. Today, with all those regulations, and we're really we're all over the place, right and left. And why are we not, or foreign companies that are not familiar with the French markets and working in LPS, for example, should they not be subject to regulation to help them fend off disasters? So we got companies that are now going bankrupt. Over 100,000 customers that thought they had bought a 10-year insurance policy end up without an insurance policy. And in parallel to this, we got stakeholders such as ourselves, for example, for 5 and 5 years. We've been losing margins and are now facing up to much important risky situations than in the past. So perhaps we need to change the point of gravity here, rather than to just focus on trivial issues and this control coordination on the European level. This should no longer take place. And in the pipeline, we still got 3 to 4 announced bankruptcies. Now, what are we doing about it? This is very important. Now, another issue is retirement. To be honest with you, we got an opportunity in Europe with all those various movements of men and women in this very nice community. We have this opportunity to create a response that can be adapted to in different countries and really make it possible to pay their fees and benefit from a good pension, and not just a solution based on financial markets, but a very sturdy response, a very sturdy solution with a live guaranteed income, because retirement, I mean, this is how it needs to be managed. In other words, well, we need to really allocate relevant resources accordingly. Now, those are issues which Europe needs to embrace for the good of all of our citizens. A very last issue I would like to put on the table, and this is quite an important one. We tend to consider Europe as the center of the world, just like it's navel-gazing. But very often, when I consider what we're now doing in terms of expectations and regulations, requirements, and when I compare this to the rest of the world, are we really working on our company's competitiveness in the face of competition in the rest of the world? I belong to a group working in 70 different countries worldwide, and I'm lucky to be able to work in this context. But I realize that this European regulation does not always allow for the development and the robustness of European companies, because they need to battle worldwide, and this is something we need to factor in, all the more since protectionism is ramping up and lax behavior is also getting more significant. And what are we doing about this today? This is a good question, and I'd like to turn to Gabriel, perhaps.
No, but I'm quite happy that Jacques made these points also, because it shows that that we are on top also of the evolutions. And the points that you made, for example, I'd like to touch on two of them. Firstly, in terms of investment long term, it was mentioned also by others, infrastructure, for example. Europe is the first in world terms to have in the regulatory framework a specific asset class for infrastructure, with a number, of course, of criteria that should be used. There's a lot of, I would say, interest. I don't hear that it's the insurance regulatory framework that's the obstacle. The obstacle is that there are not enough good projects, that there's not enough standardization to bring these projects to be investable. And let's also talk about the elephant in the room. The issue is that there are political risks in infrastructure. And so it's not only about insurance regulation, ladies and gentlemen, it's about making sure that the comprehensive framework is inducive to this type of investments. I hear a lot of insurers around Europe saying we could invest more in infrastructure, but we need to have either good projects there, and we need to have more mitigation of the political risk. That is a challenge that I will put for the next Commission, for example. It's not about Solvency II anymore, to be very honest. Second point, the cross-border. We are very attentive to that, and let me tell you, Jacques, it's not an issue of regulation. The regulation is there both at European level and at the local level, in this case of the construction business, for example, in France. It's a matter of supervision. And I've been here, Bernard always invites me, and I think I'm one of the most faithful in this conference for many years, and I've made this point a number of times. It's not all about regulation, my friends. It's a lot about supervision also. If we want to have a strong internal market where we can face these challenges of savings, of retirement, of having really a truly internal market that brings costs down, we need to have more high quality and consistent supervision throughout Europe. And I'm not, telling if this needs to be more centralized or less centralized, but we should do better right now. On construction business, for example, we were informed already, I think, 2.5 years ago by your federation of the situation of this construction business. We have been using to the utmost extent possible the current powers that we have, I think already with a lot of success. We have been putting home and host supervisors together at the same table, forcing them to exchange information, because the first issue is that the home supervisors of those companies, they don't understand construction business in France and the long-term capture of it, so they don't basically push the companies to do a proper business model and to have technical provisions which are conducive And of course, if you don't do that, you have an effect on pricing, and then you have, of course, the business model which is rotten. What we found when we put this for a number of companies already in construction business in France is lack of data, basic data. It's lack of, insufficiency of technical provisions. It's hugely complex distribution models with the role of management agents that, go beyond definitely any kind of logic of, sound governance. We have been acting on this. We have been pushing on the home authorities. There's already a couple of companies, that are out of the market. Some of them, close to new business. Some others already in liquidation. There will be probably some others that are on the pipeline right now. And we had already 13 platforms. But there's a limit to the current powers that we have. We do these platforms with the goodwill and a gentleman's agreement with the home and the host supervisors. And that's why in the current review of the EIOPA regulation, we have been advocating, and thank you very much also for the Treasury in France and the Federation that has been also supporting this, that we should have an increased role in these situations, firstly by understanding beforehand that the risks are mounting, to force that supervisors have, of course, exchange of information, to make sure that the actions that are in the regulation are taken to, at the end of the day, protect the European consumers. We need to have the power to set up these platforms, the power of initiative, and the power to give concrete recommendations to the national authorities. Because what is happening right now, we're giving these recommendations in a bilateral relationship with the home authorities. Some of them take it very, I would say, positively, and there's action. Others are more reluctant. So we need to evolve in that internal market without more teeth on these situations is as weak as the weakest link. And we need to solve that.
But I thought you are discussing these platforms now also at EIOPA board level, and the peer pressure helps also massively, because I hear from other markets that through the board they have learned about certain companies and now they don't get traction when they ask for new licenses, which is all a positive development. So you have done a lot.
No, that's for sure. But there's more that can be done, and it should be done. And especially, my message is just this one. What I would really like to see going forward is that we have supervision which is more preventive. The worst thing for all of us, and it's not for only for those companies, it's for the sector, is that when we arrive there, there's already detriment. There's consumers that stayed without coverage. There's consumers that they've paid premiums and don't get it. And that's also why it is fundamental, for example, and I know that this is a difficult issue in the industry, but we need to look at the way to have a more minimum harmonized basis for insurance guarantee schemes throughout Europe. We cannot have cross-border business really bringing the internal market to its full benefit with this patchwork situation where some countries have these systems, others don't have it. Some consumers are protected, others are not. This is not possible. There are some fundamental bases in the framework that we need to set it right. But we have this in front of us. And as Bruno Le Maire said yesterday, it's time for decision also in this area. It's not only equity risk.
Yeah, I think on the last one we will have a long discussion.
Yes, I'm sure.
I would like to move maybe back to Juan, because what was raised, I think by Jacques and rightly, is international competitiveness and also the role that regulation plays here. Juan, from your perspective, when you listen also now to the discussion here at European level, you follow obviously international debates now. You were at the core of it at G20, but at the IIS meetings, you feel also the different approaches around the world. Where are you in Argentina, and what is your role model when you look forward?
Well, first of all, we are in a growth phase, and we are honestly 15 years behind Solvency II. So we need to decide which model we are going to apply. Solvency II gives us a lot of improvements in terms of internal governance of the companies, information to the public, buffers for volatility, but I believe that it's too rigid for a country, for emerging countries. So we decided to apply the risk-based approach in capital. We are working with the OTA in order to apply that type of model, because for us it's too rigid. And what I've heard from European companies, that it's a burden for them to operate in our country. We need a much more flexible regime because our economy is much more flexible. I don't know how you could handle the 100% devaluation that we have last year. If you apply directly Solvency II model, the companies would collapse. Everyone would collapse in our country. So we need to look the regulatory matters also not to be a burden for the industry at all. And also we need the industry to grow, because at the end of the day, what we are looking is to increase solvency, but also that the companies could work much better in our country. I believe that right now, what we are trying to work together with the companies, lots of companies that I see here are operating in our country. It's trying to work with them in order to apply which is the best model for a country. I don't believe so much in this one model for everyone, at least in a region. In a region, we have huge differences between countries. You couldn't compare Argentina with Chile, that has a process of 20 years of stability, for example. Or right now, we are not going to what is going to happen with Mexico or Brazil. Protectionism perhaps is a huge risk for the region. So we need to understand which is the reality of each country in order to apply the model of solvency that we are going to play with.
So you are moving more along the lines also of Morocco in a way, in terms of approach, looking and checking and then taking what is good and what can be done, but work in phases.
We believe that, first of all, in terms of digitalization and modernization, we are changing. We have a really new model. We just passed a law where any insurance product could be digitalized. So, and now all our units is being digitalized. So we are facing a really disruption at this time in Argentina regarding new type of products. If you see the 10 more important companies in Argentina, 3 of them are unicorns. So digital process in Argentina is really increasing really
I guess
heavily.
You are ahead then of Europe, clearly.
Yeah, and also regarding which is the model that we are applying, we need the Argentinian economy to grow. And we believe that our second institutional investor is the insurance industry, okay? The first institutional investor is the public fund for Social Security. So we faced last years where all our mistakes of our previous governments were fixed with public bailouts or subsidies. And right now we don't have that possibility. We are facing fiscal restrictions. Those fiscal restrictions have consequences to the public. And we believe that insurance industry and as other financial players need to be part of the changes of those investments that go to the real economy in order to have a growth of our country. And if our country don't grow, the insurance industry won't grow. So we are struggling with that now.
Well, thanks a lot, and I think that leads us maybe to the last theme, competitiveness. Where are we at European, at international level? I think Jacques raised that as a very important point. Before I give the industry speakers on the panel for the last time a chance to intervene on the competitiveness issue, we could try another question. So I don't know whether the next question could be moved up. In the interim, I could also ask somebody from the floor whether you would like to ask a question. Yes, please. And could you state your name, please?
My name is Kamenov from Dalbok, Bulgaria. I have a question to Gabriel of his preventive supervision. There must be very clear understanding what comes first. This is true for entire Europe, and even I asked Minister Lemaire last night about this. What comes first, financial discipline or growth, in your understanding? Because it's quite a conceptual issue which you have to have in mind before anything in implementation. And by the way, congratulations for your wonderful relationship with home authorities. They of course, lots to be improved, but you do a great job. Thank you very much.
Well, of course, regulation in a certain sector, it's always a balance between competing objectives. We're not naive. Now, it is clear that you, as a government, or in case of Europe, of course, as the political institutions, you have different types of tools at your disposal to achieve objectives. What we believe, of course, is that prudential regulation, main objective, should continue to be the protection of policyholders and financial stability. And I believe that, and I truly believe that it's possible to do that, while at the same time, understanding the dynamics of what is relevant for growth, what is relevant for long-term investment. But of course, when you take up certain types of decisions, you need to come back to the main objectives that you have those tools. And prudential regulation, it's about, of course, policyholder protection. So I will always take that as the most fundamental element. But I'm quite convinced, and I think that we have seen in practice, and we have gave also, I think, a lot of advices to the Commission in the context of Solvency II and other areas, where, of course, we take into consideration also the importance of having the insurance sector, as part of growth. But it cannot be the first objective, because at the end of the day, if you do that, you're subverting the type of tools that you use. There are other tools that you can use much properly, I would say, for that objective.
Well, although it's strange that when you speak to regulators around the world, very frequently you hear that in other regions it's possible that growth aspects for the industry are being considered also by the local supervisors.
Yeah, Michaela, that's about mandates.
Yeah.
Mandates. I think that what we have seen emerging, especially in the more developed countries and also in certain emerging countries, is of course to have this separation and this more independence, of course, of prudential regulation in relation to other types of objectives. As I said, I believe that it's possible to, to get it together, but I think it will be wrong, to be very honest. And you know where I'm coming from, and I know where you're coming from. But I think it will be wrong to use prudential regulation to foster, investments in a particular type of asset. It will get bad. That's the only thing that we know. And I think that we can do much better by having a right balance. But let's not invert the schemes. At the end of the day, all of you as insurers are there to provide good products, good results, good outcomes for the consumers, and to have also protection for these consumers. And if things go bad, and we know that markets at some point in time they will go bad, and if you concentrate, if you have risks that are not treated properly, this will backfire. And I think that is something that we should continue to look very seriously.
I will hold you to that when we discuss sustainability again,
yes,
because
yes,
I think then it will become interesting. I now turn to the question that you see on the screens. We see that, you see it here, I think. We see that in the United States we have deregulation agenda. I would now like to give the floor to the industry speakers. Maybe Pascal, your views. Where do you see developments in Europe? Should we try to replicate? What's your view?
I'm not convinced that we should go that far. There's a role of protection in the regulations which shouldn't be underestimated. That is the role of protecting consumers. This is the final purpose and aim of these regulations, isn't it? We have touched upon some of the limits of this protection, but it's very stimulating to engage in these discussions. Now, you asked earlier about competitiveness and what could concern us, what could worry us. in these regulations, that is competition-wise, and how these regulations impose constraints on us versus competitors which are not constrained. So the first issue is the equal playing field and being subject to the same rules when we are operating in the same sandbox. Jacques, you mentioned the issue of UPS. This is one of LPS, sorry, of insurers operating under freedom to provide services, LPS in French. It is a situation, of course, which is not bearable and sustainable over time, as we are highly exposed to this in our countries. There's another situation which regulations are finding it difficult to accommodate and to respond to. It's the situation under which operators, and this will be more the case going forward, do not address all of the insurance value chain in its entirety, but cover some of the links or some of the parts of the value chain. And this generates high exposures for us because it means that market participants will be able to focus on the most profitable links and steps in the value chain by capturing client and customer relations, which are of the most critical importance for our industry, without being subject to all of the regulations we are under. And there can be a gap between the reality of how the markets actually operate and the way the market is regulated, which can come with a high penalty.
Your perspective that we need to pay attention to. Yeah. It's always difficult because you are just next to each other. But I start with you, maybe. Yeah.
En fait,
in fact, I wondered. Let me take some perspective here. We have Asian market participants, we have American market participants, and we have the Europeans. I thought that regulations are introduced to protect consumers and also to protect industries, to make sure that the industry can operate at the global level and find its rightful role and place. So on this panel session, you have European and world-class insurers. So this dimension should be protected. Désolé, l'interprète n'a plus le son. Donc, an insurance industry, and I could have said the same about the banking industry, because a powerful insurance industry, as you can see, that insurers support and stimulate businesses, economies, and contribute to the future of Europe. And we can see that the boundaries between industries will be blurred more and more. You can focus on portions of our business operations, being the car industry, healthcare. The boundaries will be blurred more and more. You, as regulators, are also here to protect us as organizations, not just the consumers. You are here to protect the industries in a world where boundaries get blurred more and more, where we run more risks of not being able to capture these changes in paradigms, and that we have new interlopers capturing segments in the value chain. Pascal mentioned capture of some most profitable segments, but you can see that insurance services might be packaged with mobility offerings where the regulators will be missing this out. So protecting the industry is, to me, important to help the insurance industry grow and help it find its place and role, where technology and innovation means that the boundaries between sectors are blurred more and more. Jacques? I fully concur with what Jacques said. I would just possibly mention some examples to prove the point. We operate in Asia, for example, and we see other market participants operate in markets like Hong Kong or China. We are not playing by the same rules. You know, the Solvency II regulations are a burden for us, clearly so. So this is a question of where you place the needle. We, I think, have a magnificent intellectual construct. We have a magnificent tool. We've implemented it. We've done lots of things in this respect. And today, at the end of the day, it's possibly strengthened consumer protection and security, possibly strengthening it in aspects where possibly it was not so important, you know, a 10-year construction guarantee. Okay, but there are lots of white spots. And at the end of the day, it possibly makes companies stronger. Well, yes. But the price is very high if companies are not able to grow and expand and play a powerful role in Europe as an insurance industry reaching out to other regions of the world. I spent 2 years in a country where 1/3 of insurance companies failed between 2000 and 2003, going bankrupt. When I see how today the supervisors or regulators focus on survival and safeguarding companies, well, in these regions of the world, I think that the European regulators should also follow this example and do this as well, because ultimately if companies get weak and spend lots of time, efforts and money which are not so useful and that at the end of the day go bust and disappear, will have all collectively missed the boat. These issues should be prevalent, I think. I think we're finding too much on technical angles and not enough on strategic angles.
Well, I won't definitely. You know, I definitely agree that there's a strategic element in here, and we should not be naive. And actually, I think if we look from a, you know, economic perspective worldwide, insurance is probably still one of the few areas where the big international players, we have a lot of European ones, and I don't think that that's by accident. Of course, it's because you know, all the knowledge and experience and capacity has been developed throughout the years. But I firmly believe that, you know, all the work that we have been doing also in terms of having strong governance, on having much more focus on risk management, etc., also increases that capacity and brings, of course, the European groups to have, I would say, the possibilities to gain competitive advantages internationally. Now, of course, there's a play internationally. The way that Solvency II was implemented was definitely also looking at that, because there's the concept of equivalence in the sense that you know, only if you have regimes in third countries that are considered equivalent to the European one, you consider those regimes. If not, that's not the case. We have, of course, a number of equivalence decisions that, let's be honest, also were considering an element of the competitiveness of the European groups internationally. Let's not be naive also. And there's a second element, which I think it's very important, and that we are quite strong on that, is that, you know, we should, in this world that, you know, as it said, it's going more to nationalisms. We should continue to push for international organizations, and we should continue to push for having international standards that are sound, that are robust. And that's the objective that we have, of course, at the level of the International Association of Insurance Supervisors, where we, you know, develop standards, and we want, of course, to make sure that as time goes by, we can have a standard also emerging in insurance, in the insurance capital, that will give us as a result that there will be no arbitrage between the fact of a big group, a big cross-border group at international level. There will be no arbitrage between having, you know, its head in the US or in China or in Europe. Of course, this is a long-term objective. I think we're making progress. And believe me, the reflection that I had from participating in these things for many years is that definitely if we stay, you know, together, both on the regulatory side with I would say, the strong positions of European regulators in international debates. If we have also the support from the industry in making sure that not only in Europe, but also in the different countries around the world where you are, that you also, really try to implement the best practices in those countries, we can drive, I think, internationally also the regulatory framework to a situation where there will be less possibilities of arbitrage that we still have nowadays today in some circumstances. So be sure that we are attentive to that dimension, of course, and that is something that will continue in the coming years. But that's the way that we are, of course, driving the discussions.
Okay. Well, thank you. We have, in principle, still a very interesting audience question, number 3. I don't know whether this can be played, put on the screen. I ask, in the meantime, whether there is another question from the floor. Ah, yes, please.
Bonjour, Président.
Chair the Higher Insurance School, and I'm very proud to provide education and training on insurance to my students. And I'm proud to say to my students that in France there are 1,000 European companies which can operate under freedom to provide services, LPS being the acronym in French. When I explained this to them with respect to the home country control, I explain that the supervision authority of the host country, before it authorizes a company that it can underwrite services in France, make sure that in the home country that it can operate under the best practices with respect to risk control and management. The question I'm asking here is that I thought that you, as a European regulator, had disseminated some kind of a charter to the various supervisors and regulators, reminding them of this rule, that is to ensure that in the host country, the insurance services which were provided were based under the best possible practices in their home country. So I'm turning to you and asking you, how is it possible that European supervisors have granted licenses to companies in their countries to deliver insurance services that they are not able to control and deliver in their home countries?
And we have been confronted with a number of different types of practices in different countries. There's also the situation that very often, when you have the authorization of a company to do a certain type of business, in the initial plans, you don't have a huge developed, of course, I would say, scheme of operations that comes with time. And so we have observed that some companies, for example, they have started to do business afterwards, not according to what was the basis of the authorization. But that's a very important point, and that's why we recently published a decision by our board on the collaboration and the cooperation between the national supervisory authorities, where one of the fundamental points is precisely the one that if you authorize a company that goes to do business in the outside, in another country, you need to make sure that you contact also the other authority and that you receive information about what type of business is this, and that you have then the home authority with much more capability to challenge the company that is coming to do this cross-border business. We're going to monitor this in next year. We believe that this can change a lot in terms of making sure that there are preventive actions and not of course, when already there is consumer detriment. That is the spirit, and again, I believe that it's already changing, definitely, this approach, but more needs to be done in this area, and we need to have more consistent supervision, that's for sure.
Yeah. Okay, yeah.
I think Jacques has a very good proposal which makes horse sense. In other words, how could we imagine practicing freedom to provide services, risks that you don't even practice in your country of origin, right? Just mention it, Jacques de Peretti. Look, we have a system, we won't dwell on it, with two unique features that can be found in no other country. The first one, it's not a risk of liability, it's a risk of damage. So the liability has to be established. If there's a disorder, the insurer must compensate. And this, well, many people haven't understood it because in the US and other countries, you have to prove the liability of the actor, of the player, to be compensated. We have the opposite here, the reverse. And secondly, we have a duration of 10 years. In many countries, people don't have that 10-year term. So there are two specificities. I do not know how, from a third country, we could have some experience on these matters.
Opinion on that, to be very honest. I think the principle of the internal market, you know, it should be, of course, free. And I think the issue is not that you shouldn't do that. The issue is at the beginning that if you don't have an understanding of those risks, if you don't have a risk management system to deal with those risks, you should not be allowed to do that. And that it's independently of if you do it in your own country or if you do it in a cross-border country. Of course, it's more complex to supervise it in the cross-border basis, but that's our responsibility, and to have the structures in order to control that. Because what I would not like to see in this discussion about cross-border business is that we start to put elements in the system that basically, you know, look back at more nationalism and cut back what is the benefit of the internal market. Because let me be very clear. You know, we need probably more internal market if we want to really serve clients and to have better products and to have lowering the costs. We need to have more better internal market and not, you know, not to fight against the internal market.
Well, I think that was a good closing argument. We have reached the end of our panel. I have certainly enjoyed engaging with all of you, and I would like to invite you all in the audience to show your appreciation to the splendid contributions.